Hello, my amigos. Right, couple days past. What we doing? Trade recap. Took a trade today. Closed it just the tiniest bit early. As you can see now, it has hit TP. This is where I closed it, and we're gonna go over the move. Also go through Monday and Tuesday's trading as well. And as you can see here, pretty good, pretty good. I didn't take these. If you go back to my last video, you'll see the Monday move that I went through. Just where we at Sunday there. There we go. Yeah, so pretty much price did end up coming back up into that equilibrium zone. Tapped it twice, traded down, going into the Asian session, and from there we had another model form, or not necessarily, and yeah, that would have been stopped out just by literally a pip, as you can flipping well see. So that was quite lucky we didn't take that. And today we struck gold. So bagged 522 pips today and £280 profit. So no complaints there. The original target was the previous daily high, but we have Trump speaking at 7 p.m. UK time, and yeah, just don't really want to be involved in the markets when that's going on. And looking at the daily chart, if I just take the drawings off, I wasn't really fancying how the candle looked in terms of, is it likely the price is going to, tap this and then continue down, or is it going to go all the way today? And so I just settled for halfway, and we struck. So one of the things that I'm going to start implementing into my trading is marking out the highs. As you can see, I marked out this level here, this level here, and this level here, which on the 30-minute is a bit clearer to see. Reason I marked this one here and not this one was because this was a 4-hour fair value, or 4-hour imbalance, I believe. Yeah, so you got that there. And yeah, I also implemented the Nasdaq today. You can see here, as mentioned in previous videos, when price reacts off a higher time frame point of interest. So this was Tuesday, and one of the reasons I didn't go in was because I was looking at this imbalance here, and it was just very likely that price is going to trade up and then continue down to then fill the point of interest. As you can see, it only tapped here, and then going into Tuesday PM, went all the way through the weekly opening gap, as you can see, wicked down into this imbalance. So now there's not much more reason for price to go down, especially on the daily chart, with the weekly chart also reflecting that, as you can see there, completely filled in. So now we've got the right means for a move upwards. In terms of identifying the setup, we had a higher time frame inverse. So we had a 30-minute inverse on the Nasdaq, and we had about the same on the S&P. Now, initially this morning, I was looking at this and during the London session, and I had to go quite low on the time frames to identify a fair value gap above that inverse. So where is it? As you see on the 1 minute, that would have been a perfect entry there. But during the London session, I believe price did trade back down into that sort of zone. Where is it? So it's there. So it was actually after the London session. So we manipulated down, respected the inverse fair value gap, which is very important. The bodies respected it, and we saw a nice reaction off that. So with that combined with this higher time frame point of interest, same again here, I was a bit more inclined to see a bullish move today, being Wednesday as well. You think of a bullish weekly candle, the start of the week's normally going to go down, and then we go up later in the week to form the body of the candle after forming the wick. And yeah, so from there, where was my entry? I believe it was on the 5 minute. Uh, duh, duh, duh. So I don't actually think I went off the fair value gap. I think I went off, my basis on the fact that price had come back down into this level and was moving upwards. Or was it? Oh no, it was here. This tiny candle here. Let me just mark that out. So that was the fair value gap that I went off. Is that even marked? You can't even see it in blue there, but this one here. So that was my entry. We got a nice push up above the London highs coming into 8:30 to 8:45, 9 o'clock. And then we pulled back down, filled in, well, we came off this order block here. I'll mark that as well, just for reference. So that is there. Drag that across, put that in yellow. I don't actually have it as a template, so what we'll do is this. We'll just say that's the order block. There you go. Price respects that, and then we got a nice push up off here. So what I'm going to do is I'm just going to get rid of the fib for now. And yeah, I was looking at this and thinking, right, previous daily high is going to be the initial target, and we're going to go for a little bit less than usual because we've taken a couple losing trades. So normally I'll do £180 for a stop loss, which would have been 8 units for 556 at the top here. But due to a lower balance, I wanted to drop the risk percentage, especially with Trump speaking in this evening. So it was 2.83% risk, and yeah, 158, £160 stop loss at the time. So we are filled in there, and yeah, let me just reset that. Eventually, I did move my TP down to this line here for £305, but it was this consolidation here. As you see, I marked out consolidation zone right before the push up. So we took 280 instead of 305 right before I left the office, which is, I'm fine with that. It's not a big amount, especially with this size account. So put that back like that. During the trade, what were we doing? Right. So we got this nice push. We got the 930 dip down into that order block, and yeah, so 945, 950. We got this nice push up into this 1 hour fair value gap, and that was the first draw. I marked this out, and I was using the Fibonacci range here. Ooh. So we just drag this down off this wick. So this was this leg of the move down, and this was just in case we had bearish action. So you can see here that would have been an optimal trade entry bearish if price needed to go down any lower. But as mentioned before, I was more comfortable with the fact that the higher time frame point of interest being filled and we're trading up out of it, that this could potentially continue upwards. So I stayed in the trade here. And yeah, so going back off that idea, you can see we got a lot of consolidation around this sort of zone, all the way from 950. And I was looking at, are we going to see a 10 a.m. reversal here, or are we going to continue upwards with the model? One of the things that I was checking to help give me just a bit more confidence in my, or a bit more conviction in my trade idea, was on the NASDAQ. We created this 5 minute fair value gap here. 1, 2, 3 bullish candles, fair value gap. And as you can see, respected perfectly. Bodies of the candle all sit above it, which is very nice. Then we got the next leg up. And from here, that looks something like this. So, 11 o'clock, we were still sitting around here, and from experience and just looking at the markets over time, I'm happy with sometimes the trade not always delivering at 11 o'clock as per the ICT silver bullet, and just letting it run a bit longer. It's basically the same sort of thing. And yeah, so we just let this one run, and it was around this point, I think around here, where I started marking out. Oh no, it was around here I started marking out the highs as mentioned. So I'm going to be implementing that. Now, why did I mark this as a consolidation zone? Because from experience, I know that there's usually a tiny little consolidation before a high gets swept or take profit comes. And that's just people getting out of their orders, people wanting to secure their profits early. Orders are chopping and chopping, and there's a bit of a slow period before the next leg up. And as you can see, 1, 2, 3 candles, it kind of lines up with this fair value gap, these bodies, and yeah, price trades through it, comes back, and I closed just above here on the way back up, and now we've pushed even higher. So the next target, I'm assuming, is going to be this high here, but I just wanted to secure some profits today, and I've been in this trade 4 hours and 36 minutes before closing. So I just wanted to bag it basically, and just take what I can whilst it's there. Yeah, I think that covers most of the idea for the trade, and it's nice to see confirmation that with the higher time frame point of interest acting as a reaction zone on the Nasdaq, that we can then increase. Well, it's an increased probability that price will continue, or price will deliver the model a bit nicer. So yeah, I think that is, to be honest, that's probably going to be me done for the week now, in terms of trades. We're not trying to reduce, but if I can implement my model more, where the higher time frame point of interest is acting as the main driver, the main confluence that I'm looking for in the trade, then we should be able to increase percentage of profitability. So yeah, just a quick note for myself. Another reason why I didn't enter on Tuesday, I'd seen a lot of news, a lot of graphs on, institutions and hedge funds being net sell on the market for the last 2 weeks. And, I was quite heavily considering trimming some of my positions in my own portfolio. I'm still toying with that idea just in case, but, in terms of actual day trading, I just wanted to wait a little bit longer, because in my back testing, I've seen this happen time and time again, where you tap the higher time frame point of interest, drop below it, sweep it, and then you see it play out a bit cleaner. So this one was more just a fair value gap slash equilibrium retracement. So if we do that, yeah, you can see we come up to equilibrium, continue on the next leg down. So is that everything? There was red folder news today, and so as you can see, non-farm employment was much better than expected. It's forecast 32K and it came in 42, so that's a bullish signal there. PMI increased, so I think that's better than expected. I might have to look into that. And then, yeah, as you can see here, Trump speaks in the next 15 minutes. So it's either going to make the market rip, or it's either going to dump. So, yeah, that was one of the reasons I wanted to get out beforehand. I wouldn't be surprised if we see this get hit. I wouldn't be surprised. But like I say, 522 pips today and £280. Profit is nice. I think for the last, what is it? I think overall in the last 3 months, I'm down quite a bit. I'm down, what am I? Last 3 months, I'm down £1,018 in the last 3 months. So there's still learning curve. Main target for the end of the year is just to survive with my portfolio. Like I was looking back at the first video journal that I did, or the first video that I posted where I moved from the demo account to the live account, and just really reflected, to put it into perspective, coming into the live markets after 3 months of profitable backtesting and expecting to have a green year. It can be done, but there's no need to rush it. And I think my new target is just to survive, really survive the year, ensure that I haven't blown the portfolio. And as you can see, well, as you know, we're in November now, so it's a good sign. It's my first year in proper live markets trading these conditions, and just seeing the progression is good to look at. And I'm just going to stick with it going forward. Over time, profitability will increase. The size of my trades will increase as I deposit more funds. Um, I mean, if I look back to early in the year, my stop loss would have been what, like £30, to now having 180, £160 stop losses. So just gradually increasing my capacity for risk, and my emotional emotional strength in the trade as well. Just being more comfortable with the model as I gain more data from trading it in the live markets, journaling them. It's all part of it. So yeah, I think whenever I have a green day, it's always a relief, and it's always a reminder that it can be done. And I have to remind myself as well that when I back tested my model, I was only 30-40% profitable. So that means out of every, say for example, 30% profitability out of every 10 trades, I lose 7 of them. And then if I'm back testing, I can go through months in the space of a couple hours. Do you know what I mean? Whereas this, you have to sort of you have to sit in real time and do it. So it may feel like I'm behind, but as long as I stick with it, stick with my risk management, the profitability is there, and it just takes a bit more time. So I think really, with all that being said, we can have a quick forecast for what we think, for what I'm thinking the rest of the week's gonna look like. Uh, let's go off the basis that we do clear this previous daily high. I think we could see further highs made. Whether or not we see like a little consolidation tomorrow, or maybe another bullish day tomorrow, take another high, and then Friday come down just to cool off. I wouldn't be surprised with that. Just have a look for news. Tomorrow's Thursday. We've got Canadian red folder, London red folder, quite a lot. Monetary policy, bank rates. And Friday, non-farm employment change again, unemployment rate, Canada. US unemployment rate. So yeah, if I don't take another trade, I'm happy with this for the week. And yeah, I think that's gonna kind of round me off for this video. And I hope, as much as this has been a nice journal for me, I hope that this has been informative for you as well. I hope that you've been able to take some knowledge, or at least something from this video. And if not, that's absolutely fine. And yeah, that will be me. I will catch you tomorrow.